lot of people that were interested in why you moved to Zurich. And I know you've spoken before about, that there's more sort of, I guess, calmness there, and it helped you get some more clarity when looking at investments. But why, I guess, Zurich specifically? Why did it appeal to you, let's say, more than other big cities in Europe, let's say?
Yeah. And, in retrospect, when I think of, I moved to Zurich, I did not expect that it's not within 1 decade, but within 2 decades of moving to Zurich, the continent that I was on would be the subject of yet another war, a shooting war. I think we're all very shocked by that. And I can tell you, Itai, that it doesn't feel very good, because it's on the same continent. And the idea that it would ever come to Switzerland is small, but it's still on the same continent. But if you have the goal to build multi-generational wealth, then you want to be in a place that allows for multi-generational wealth to be built. And if you've got a revolution or a war or something that's going to take all of that apart, it's going to destroy it. So that was motivational for me. And where can you do that? I mean, I think that Switzerland's a pretty good place. I think that the United Kingdom or London's not a terrible place either. But and I looked at some other places as well, but I was really enamored with Zurich because of the size, because I was familiar with it. And at the same time, I was looking, as the chapter suggests, I was looking to create an Omaha of my own. And I felt like Zurich was a pretty good Omaha. And by the way, there are a number of very successful value investors who are based in Zurich, in terms of returns, far more successful than me. So somebody you should definitely interview if you can get him is a guy called Rob Vanel. He married a German woman, but he's in Switzerland as well, in Zurich, for similar reasons. How'd I do?
You did very well. And we were wondering as well if you can talk a little bit at all about Seritage growth properties. And I mean, there's a lot of sort of mall companies who, during the pandemic, their stock price got hit really hard. Why did that seem more attractive to you at the time, let's say, than some of the other mall companies?
Yeah. So you're inviting me to violate the rule about not talking about investments, but I'll have a go, and hopefully it won't compromise my thinking too much. An investment that I had in the past was a company called Crostex Energy, and they owned gas pipelines in the sort of in and around in Texas, in these new shale gas fields. And they're extremely critical infrastructure, and they kind of like a bit like towers, cell phone towers, in that most real estate you can only rent it out once, whereas these oil pipelines, you can build on top of them. Once you have the rights of way, you can expand capacity, you can sell to multiple clients. So it had really good economics. And during the financial crisis, because of the way they were funded, the shares went from $30 a share to $2 a share. And the way it worked out for that company is that the company ended up being sold at $30 a share. But so it was it was one hell of a ride, not in the right direction. And obviously there were some things that I got wrong in the analysis, and I didn't get the business analysis wrong, but the way the business was funded was it was funded through these MLPs, and MLPs, the business model was good so long as the market for issuing new limited partner units was open. But when that market closed, the business model was, well, it appeared, I realized then that it was really very highly valued, and that I owned actually not the underlying business, but an interest in the partnership that ran the underlying business. What's my point, though, long term? So my point to you is that that's an example of something where I got a lot of the analysis right, but there was something that I missed. And as a result, I had one hell of a ride, but it didn't work out as an investment. But I ended up not losing an enormous, I didn't lose any money other than the opportunity cost. So if we move to Seritage, I think that there are a number of things that I have no doubt I've gotten right in the analysis. And one of the most important things is what your time horizon is, because you need to be able to be solvent for long enough in order for that to play out. And I actually have every confidence that that insight into the nature of Seritage's assets will play out over time. I realize that we're talking when the chairman has just resigned, and it appears that he's put up the company for sale. And I don't fully understand his motivations for doing that, other than he might just be tired, and he might be sick and tired of dealing with the Sears bankruptcy, and he just wants to. But it's also potentially a very interesting marketing strategy, because they have a vast estate, and it's very hard on a retail basis to get people to look at that estate properly. And so by hiring an investment bank and saying potentially the whole thing is up for sale, we'll get a lot of very, very bright minds and people with the resources to be able to put their hands around this enormous estate and make more sense of it. And so the game is not yet over. But having said that, I think that if I look at my analysis, and the underlying real estate is, I think, extraordinarily valuable, and will continue to get more valuable. So this is not just general. This is not like St. Joe Properties, which owns vast acres of farmland. It's very specific real estate around some extraordinary locations, and everything, all economic. More than 99% of economic activity, maybe it's not 99, but 98 or 97% of economic activity happens within 1 or 2 or 3 kilometers proximity to major roadways. And Seritage owns a vast estate of real estate around these major roadways. So that basic insight is a powerful insight. I don't think that, obviously, I underestimated the impact of Amazon and the internet, and I certainly didn't predict the pandemic. And I think that, thirdly, what I've learned about real estate is, yes, the real estate is valuable, but it's extraordinarily difficult to repurpose that real estate. And I've seen that. It requires significant investment, and it takes time, and it takes the ability to permission things. So it's a difficult asset, but the game's not over. We'll see where it goes. I think the only other thing I would say is that when you look at other people's portfolio moves, what the person in your shoes and in my shoes has to keep in mind, and this is perhaps the most valuable thing I can say to the Brown audience, is you have to take into account what proportion of their portfolio is it? What proportion of their net worth? How do they manage their wealth? Do they manage their wealth in one vehicle and multiple vehicles? Is this 1% of their net worth? In which case, did they just take a flyer? Is it 100% of their net worth? Is it somewhere in between? How did they size the position? So, often you see a news story, or somebody writes something up, XYZ person bought or sold this. And, there are sales that happen of companies where a well-known investor will sell a company. It's actually got extraordinary prospects, but they just have a better thing to do, or they're meeting with redemption requests and they prefer to sell that to something else. So there's a lot of noise in that data, if you like. So.
Yeah, that makes a lot of sense, I think. And one of your previous investment strategies, I don't know if you still use it, was to invest in maybe some of the lower cost commodity mining companies when they were more towards the bottom of the cycle. Are there any commodities that look interesting to you nowadays?
Yeah. And so I've come to the conclusion that I will never invest in commodities companies in my life. I never say never, so I'm not ruling it out completely. You never know what you might come across, but I think that, and I don't mind the fact that there are mining companies out there, and there are mining companies that deliver extraordinary value to humanity. So I don't want to denigrate any mining company, but mining by its nature it can draw in all sorts of bad behavior and activity. So it starts with this company that I used to have an investment in, Potash of Saskatchewan, basically runs an international rigged market. So they manipulate the price of potash, and they have good reasons for wanting to do so. But if all the potash producers were in the United States, what they do would probably not be allowed. And the only reason why they could, or in any single country, and if all the potash producers were in the EU. So mining companies have the opportunity in certain commodities to kind of like to create a cartel, a pricing cartel. And they also have the capacity through those pricing cartels to manipulate the price to their benefit. So, you know, there's a very clear concept in the mining world of a junior miner versus a senior miner. The junior miners are the ones that go bankrupt when the senior miners decide to crash the price. And because the senior miners have better access to capital, then usually it's the junior miner that will go under. And there are examples of people who've broken through that. So one famous case, which is another one that I was invested in, is Fortescue Metals. So there are some junior miners that become senior miners, but very few. And in a certain way, my perception of companies like Anglo-American and in Switzerland, Glencore, is that they're a kind of a mafia, but you know, a mafia that you want to be super wary of. Then there's the whole factor that any extraction of some kind of commodity or raw material, you know, these commodities and raw materials often show up in places that the rest of us don't really want to go to. And in order to get the right to mine them, you have to engage in some pretty, you know, sketchy dealings with people from foreign governments. And again, the people at these mining companies, they just say that's the cost of doing business. We have to do this. And so again, you know, in the words of The Godfather, I don't want to begrudge. I don't want to judge how somebody makes his money. You know, I'm not here to be a big judge, but I think that if I have the opportunity to make a success of my life without being involved in the mining industry, I think that I would do it. My most recent mining investment was in a company called Jordan Phosphates, which was based in Jordan, right next to Israel. And you know, the investment, it was a bit like the Crosstex investment. It worked out, well, it worked out for me not to lose money, or for me not to lose much money, but I didn't make any money. And I just realized that I don't have to do this, you know. Again, people who make tobacco are making a legal product. They're engaging in a perfectly legal activity, at least they are now. But that doesn't mean I have to be in the tobacco industry, so.
Yeah, that makes sense. And you don't need to speak about any companies in particular, but how do you get comfortable when you invest in China with some of the political regulation there?
Yeah, so China is an interesting case for me that involves a certain amount of contradiction. So my friend Monish has been traveling in Turkey a lot, and it's public knowledge that he has investments in Turkey that the Turkish stock market gets very excited about. And I've told my friend Monish that, you know, there's many other far more unlikely things that would happen before, or some very unlikely things that would happen before I invest in Turkey. And my word to Monish is, I don't want to invest in a country where the president imprisons journalists. And you know, it's for a similar reason. I have friends who had, I don't know where it is right now, investments in Russia, in Spier, for example. At my recent ValueX conference, somebody presented on a kind of a blue chip Russian mining company, which has got impressive, they own, well, it's mining, but they own some impressive assets. And Sberbank, for your interest, is the JP Morgan of Russia. This institution has been around since before the Russian Revolution, has survived so many changes in Russia, and has some extraordinarily high quality people working there. And what the kind of the rationale for investing in Sberbank is that, yeah, there are a bunch of crooks around, but everybody needs their Switzerland. So they all have to transact through somebody. They have to need a counterparty they can trust, and Sberbank is the counterparty that they can trust. But the country is run by, well, we know who the country is run by. And the question is, if the idea that the fish always smells from the head. So I kind of like stayed away, in part because I just don't, so if I buy shares of a tobacco company, am I killing people personally? No, but I'm somehow tainted by the connection to the company. And you might say, well, you own your shares, you don't have a direct investment in the company. But on another level, I do have a connection. This is all going to get to China, by the way, so I will answer your question. So the same way that if I'm invested in a country where they imprison journalists, then on some level, the tax revenues that my share in the company represents, that it pays, is kind of supporting that system. Do you really want to be there? So I haven't ruled any countries out as countries to invest in, but it's unlikely I'd invest in Turkey. It was equally unlikely that I'd invest in Russia. I certainly, now, even though Sberbank is trading at 0.5 times earnings, if you happen to want to, move to Russia and buy Sberbank, you could buy it for 0.5 times earnings. So let's go to China. And so China, is not a free country and imprisons the Uyghur population, which is certainly human rights violations. At the same time, for me, it's a far more complex picture in China, because they have done an extraordinary job of lifting a vast number of people out of poverty. And while it's not a free country in the way that I would describe as free, millions of people travel from China and voluntarily come back to China. So it's not so unfree that people once they've left never go back. And I think that where I come out on in China is that it's on a path. There's a commitment by the Communist Party of China to make the country a better place. They're working for the common good, and they have a way of doing it, which is not our Western way, but there are many things that they've done in China that people in the United States would have loved to have done. For example, restricting gaming on children, or restricting tutoring companies that are basically just help people jump the line to get into educational establishments. So they've achieved extraordinary things, and they are continuing to seek to deliver for the overall population. Now, does that mean that they're not committing human rights violations against the Uyghurs or against press freedoms? No, they are. So it's an imperfect country, but I feel like it's on a path to somewhere good. And then I think that it's really important that in the countries where you invest, if you're investing in China, if you're investing in a business that is not win-win for all concerned, like the tutoring companies, then you could get your head handed to you. But if you're investing in a company that is genuinely building the Chinese civilization and global civilization, then maybe some risks are mitigated. Excuse me, I got a yawn because of jet lag.
And you spoke a little bit about Israel. Have you found opportunities in the Israeli stock market attractive in the past?
I mean, I think that there are certainly companies that I've missed that I ought to have taken a closer look at. One's Matronics. Another was SodaStream. Another is I've blanked on the name, but they have they do payroll systems for an increasing number of Israeli companies. I think that I'm wary of Israel. First of all, I have a personal bias towards the country because I spent some of my life there. But at the same time, many of my investors have nothing to do with Israel. And so I have to find the best investment opportunities for my investors. And as you got from an earlier part of the conversation, I'm very focused on building multi-generational wealth and building the fund up into something that people can count on and rely on. And I think that what may well take out our investments has got nothing to do with the quality of the analysis, but some awful global event. Like, it doesn't matter how good a business you invested in Ukraine. but your neighbor happens to be Russia. So there's just an unfortunate and inevitable country risk that exists for Israel because it's a small country in a nasty neighborhood that does not exist for the United States or for China or for India. And so the combination, excuse me, the combination of those things has made me, it hasn't brought me to pull the trigger, but that doesn't mean that I wouldn't in the future. And the safety and stability of Israel is certainly has changed drastically, and especially with the, with the Abraham Accords, it's gotten even better. But my goal, I also have Israeli investors who don't need me to help them invest in Israel.
Yeah, that makes sense. And also, how do you look at, I guess, investing in Japan? Is your framework there different at all than investing in other countries? Because there seems to be a lot of things that, maybe look very quantitatively cheap, at a discount to, their net asset value or a cheap earnings multiple. But, it seems like there's been a lot of value traps there for even decades now. So how do you look at investing in Japan?
So look, nobody's telling me I have to invest in Japan. I don't. So, and there was a time when Monish talked to me about these nets, and they were nets. And they do work, by the way. But what I found was that it was a lot of work because you have to keep recycling out of the things that you have into new ones. So you get your 50% pop, and then you have to sell that one and buy another one. And so that's quite a bit of work that I was less interested in doing. I think that also something that happens to all of us who invest outside of our home country is that we just take the things we don't know and we project what we think we know into them. So this was the case with the people who tried to do activism in Japan, and they just assumed implicitly that the legal system in Japan would give them the same rights as the legal system in, say, the United States. This is not because I'm really enjoying talking to you, it's because of jet lag, I apologize. So it's funny because I've got some, I just heard a presentation the other day by somebody who was talking about a spectacular Japanese company, which is, it was not quite Rakuten, but that kind of business. And so China has some really interesting businesses in it. It's also an aging country with an aging population, and obviously has these kind of like factors where capital just gets trapped and people are fine for the capital to stay trapped there. So I think it's good for the citizens. I think the citizens live good lives, but is it the best environment for an investor? Yeah, I'll give you another country like that. France is a spectacular country, and I've never had an investment in France. I think that the way France is put together, it's just harder to find companies that earn the kinds of high returns for shareholders and that are so shareholder oriented the way I'm interested in and the way would do well for my investors. But the country, by and large, I think France does really well for its citizens. I mean, people are really happy in France. And so some countries are less susceptible to kind of Anglo-American approaches to capitalism. I think Japan is one of them.